You're now listening to What You Don't Know podcast. You're now listening to What You Don't Know podcast.
All right. Hello, everyone. Welcome back. I just wanted to have to give a big shout out to my man representing Chi-Town, Salo Homie, on the track. The track is called Waves. When I listened to the track, it was melodic. I like it. I like the melodic sound. I just want to give a big shout out to him representing the Chi-Town. He has his own podcast, and we're going to do some work in the future. But again, big shout out to him and all credit. Thank you, King. So we're going to keep moving. So what's up? What's going on, everybody? Happy New Year, everyone. 2021. Here we go, right? I know everyone was pretty happy to get out of 2020 unscathed. A lot of crazy time in 2020. COVID-19, markets reacting crazy, influx of crime. Most of your major cities. I know in Philadelphia, I saw a stat where there were about 2,000 shootings in Philadelphia, almost 500 murders. Just very, very dangerous times in the world. Just being in that area quite frequently, you have to think, what are the odds of something maybe going wrong or some misfortune coming your way in that environment. But nevertheless, we have to push forward and not be captives of our fears, right? So with that said, we got to keep it moving. COVID-19, that really hit home for me. I didn't really say much about this, but I was diagnosed with coronavirus. I was feeling some of the symptoms, lack of smell, taste, and I was positive. Granted, very mild case in my situation. It was a very mild case. Never broke a fever. Never had a persistent cough. Felt pretty good throughout the whole 14 days or so. No real strong complaints at all. And that just to God be the glory on that. I'm really happy that I had a very, very mild case. I'm no longer in isolation or quarantine. And I recovered. So I feel good. But yeah, I was. But my heart goes out to all the millions of Americans and people across the world, all the people that have been impacted by the coronavirus. My heart goes out to you, and it's something that it's very scary and there's a lot of anxiety that goes along with it. But I wish everyone a speedy recovery. And again, prayers and thoughts to all those that have passed due to this horrible, horrible virus. With that said, I wanted to start 2021 off with a bang. I wanted, on January 7th, there's a live Zoom call that I'm having. I'm going to put this podcast up. If you're interested in kind of sharing your business and financial resolutions for the new year, things that you want to put up on your vision board, some goals, and you want to share them with some people. They're going to be attorneys on the call. They're going to be financial advisors, financial investment professionals, people from all walks of life that are going to participate on that call. So if you want to take an hour out of your time on Thursday, January 7th, 8 p.m. Eastern Standard Time, and want to listen in or even share some of your business and financial resolutions and goals for 2021, we'll love to hear it. All right. So you can send your interest to info at galvanizedfinancial.com and I'll get right back to you and confirm you for the 7th. Again, that's info at galvanizedfinancial.com. I'm Galvanized Mike. Just reach out to me and I'll make sure that we lock you in for the 7th. All right. So with that said, what I wanted to talk to you about, there's a lot of buzz, right? This is an investment business related podcast. And one of the things I wanted to talk about is the case for crypto. Okay? Case for cryptocurrency. Now, mind you, I just to take a step back, I have a long career in financial services, right? About 20 years, 15 with Vanguard, Merrill Lynch, a couple of others. And so I've stayed invested and stayed with my ear to this game for about 20 years. And when cryptocurrency first came out, I didn't like it. I didn't like it at all. It did not go along with my investment methodology and outlook. I was more so of a large cap, stay the course. I basically grew up in Vanguard, right? Vanguard, stay the course, low expenses. You can't control the market, but you can control your expense, right? So you want to do whatever you can to stay at a low expense or at cost. As much as possible. That's a methodology and a philosophy, I should say, that I believed in, and I still believe in. I'm not going to say I don't believe in it now, but just for this argument, I'm saying that that was my main thought process when it came to selecting my investments. I love a broad-based index fund that's the anchor of the portfolio. And then after you start to sprinkle some other stocks that you may like or that you follow around that, right? To kind of build out a broadly diversified portfolio. You have a core, a base to your investments, and then you have the satellite, which are those things that you sprinkle on, whether it's the Facebook, Apple, Netflix, Google, whatever you're into or whatever you're following. You can kind of sprinkle around those low expense mutual funds that do that typically do well. Again, if you look at the S&P 500 index, I think that it's returned over 13% since 1926. That's pre-depression times. That performance can't really be argued in a lot of different settings, right? Because, again, it has that long track history of good performance. So when cryptocurrency came out, you had all these pundits, rappers, mothers, fathers, sisters, daughters, aunts, uncles that felt cryptocurrency is something that you should put your money into, and I was staunchly against it. It was skyrocketing at the time, and it was really doing well. I just felt that it didn't have any tangible value. You couldn't really exchange it for a good. It wasn't tied to anything. And some people may make the argument, oh, well, the dollar isn't either. We're no longer against the gold standard. I understand that, but the dollar is still the most recognized currency in the world. And there is a transfer for value that takes place when you exchange your money for goods here. And in cryptocurrency, it hasn't arrived in that place yet. So I didn't like it then. I still don't like it now. But is there a case for it? Is there a case for cryptocurrency now? As you can see at these levels, I think Bitcoin is it's priced over $32,000 per coin. Wow. Back in October 2019, it was around $10,000. Earlier in the year, you could probably have bought it for maybe 5 or 6. However, right now, over 33,000. Everybody is up in arms and looking at cryptocurrency or Bitcoin right now, I should say, because of this price. And then you have a big demand over a digital asset. I'm not going to say it's an asset yet. That's the rub, right? That's the question. I'm going to say it's a digital asset, and everybody is rushing to it. Or there's this now. You have this thing that's what we call FOMO, FOMO, the fear of missing out. I don't know if it's the fear of missing out. I think there might be a fear of missing the overhype, right? Because it's a lot of hype around this. And I think that's why people are looking at it. So one of the things before I get into the actual case, I also just want to talk about some things in regards to why I feel that there are still some issues with Bitcoin. I want to be clear. This is not a home run, in my opinion, investment that one should look at to say, yeah, I want to jump into. I feel this is a viable investment for me and my family's legacy and future. I'm not saying that. I'm not saying that at all right now, even though I know there are a lot of people out there that say, hey, this is where you need to be. This is the issue these are some of the issues I have. Number one, Bitcoin's rally is really driven by whales, large players. And this is evidenced by these transaction sizes and asset holding concentration. Like if you look at Bitcoin, it's not a lot of it, right? It's not like it's a finite amount of available Bitcoin. It's not like the Fed where you could even print more money right now to increase the supply, right? There's that flexibility does not exist in Bitcoin, right? So if you look at that alone, the concentration of Bitcoin holders are about like 95%, 90% of the holders are held by these whales, these large institutions, while the rest are clamoring for the rest of the crumbs, right? We're just grabbing at it, right? But there's this huge concentration at the top of the house. That should concern you, right? That should really concern you. If just a comparison to illustrate how concentrated the Bitcoin market is, looking 84% of all the stocks by Americans right now, I believe, belong to the wealthiest 10%. Right? That includes everything. 401ks, that's pension plans, that's the whole kit and caboodle, right? However, if that's alarming, the whole Bitcoin market should have you knocked out your seat. You should be very concerned with that level of concentration at the top of the house. One of the main issues that I have, and this is a big one, is that for cryptocurrency to be essentially useful, it should be a good use or an efficient method of transfer, right? It should be able to be transferred very easily. And it should be a good store of value, right? It should be a good store of value. Typically, if you have $10 in your hand and you put it under your mattress for a day or a week, it typically is still worth $10 worth of value a week later, right? Typically, I know the inflation, blah, blah, blah. I'm talking about a week. I'm talking about a short period of time. Stay with me. Focus, right? Not like a long period of time. Let's not get crazy, right? So if Bitcoin's none of those things, and in terms of an efficient medium of transfer, you have about $4 in transaction fees for every time you purchase a Bitcoin or do a transaction. No matter, that's going to change per provider where you're getting it. But let's just say, and also, if you look at the free fall, like there was a 1-day free fall of about 27% in March 12th of last year, of 2020, right? Last year, compared to a 6% decline in the S&P on the same day. Look at that variance. So are you okay with that? Are you okay with having $100 today and 5 days later it'd be worth $6, 600? If you have $6, $4, are you okay with that? I wouldn't be. That volatility is crazy, right? Now, you have it's very sensationalized. There is no tangible tie to that asset, and with that, so all you really do is have hype. You have just people saying, "Hey, I'm just going to buy this because of the hype." Now, I'm not going to sit here and say the name of this episode is the case for crypto, right? So I don't want to just go and I'm not making this to just dog it all outright and just say, hey, I just want to be perfectly clear that there are still some fundamental issues with this being a method of transfer. There's some fundamental issues with this being a storage of value. There's some fundamental issues with this being highly concentrated with the top 90% holding Bitcoin. There's fundamental issues when you have other coins such as Ethereum or Ripple, right? That, SEC, the regulatory scrutiny coming down on these coins. You want to have your money tied up into that? SEC comes, hits them with a $65 million lawsuit. The currency stops trading because the SEC feels that it's more of an investment contract and not a real asset. And then they're going back and forth, arguing over that fact or that opinion. Do you want your money tied up into that? Or did you want your money tied up into S&P 500? That's something that's proven at a low expense. Knock, knock. Okay. So those are some of the reasons. Those are some of the reasons that you really have to watch this. Now, one of the things I saw a pro football player. A pro football player, Russell Okung. He was paid in Bitcoin, right? This man, $13 million salary, and about $6 million of it is to be paid in Bitcoin. All right. Okung has said in the statement, and I quote, "Money is more than currency. It's power. The way money is handled from creation to dissemination is part of that power. Getting paid in Bitcoin is the first step of opting out of the corrupt, manipulated economy we all inhabit." And this is what we're going to get deep. He gets deep here. "When we are all paid in Bitcoin, no one can tell us what to do, what the value we create in a post-fiat world. You won't have to worry about your labor and time being stolen." Wow. Okay, Russell, I feel you, right? You're a millionaire. You're a millionaire footballer. That's awesome. This is the issue, though. The issue is just that. This man is a highly compensated individual. He's probably in the top 1% of the top 0.5% of American make the income he makes, probably, right? Look at that, 13 million. Yeah, you can take $6 million of that and probably continue to have a great illustrious career. You're a very young man. But the average American, can they handle that type of volatility? Can the average American take half of their salary and throw it into Bitcoin? I don't think it's prudent, right? Look, and now he gets in the small print. The quote I just mentioned was very bold, and that's what's being highly covered in, if you do your research on this topic with Russell. But if you look at the small print, then if you look at the very small print, he's still very smart. He says, I quote, now this is where it gets small print. "If 2020 taught us anything, it's that the world is rapidly changing, and the next decade will be about Bitcoin's mass adoption." In November, he said, he's saying it, irresponsibly, "I am irresponsibly long on Bitcoin." So he says, he's admitting that this is irresponsible. He was irresponsibly long. He understands, and I translate that to, I understand that this is a lottery ticket. I'm going to take a chance. I like the future of Bitcoin. I'm projecting a decade out, 10 years out for anyone running late. He says a decade, 10 years out, and he's irresponsibly long. Okay, that's speculative. I hear that as being speculative in nature. That's forward, long-term out. And it's somewhat irresponsible, meaning that I think it's a lottery, it's a Hail Mary. And that is what that's where I will get into, and what I mean by the case for cryptocurrency. I think that if you look at it, the way things are going, and we should make a move into a post-fiat economy. And I do think that cryptocurrency, blockchain technology is an answer, right? It is an alternative, right? We are beholden to the U.S. debt with the US dollar and everything that comes with that from the international impacts on that monetary currency. There should be an alternative. It looks to be that there's a means to digitally making that happen through the cryptocurrency era that we're in. I like it. That said, I would maybe look to take a small piece, very small piece of your asset allocation. Maybe 3%, 5%. I'm not going 10, maybe it's very small, and maybe put it into maybe some of the more into cryptocurrency or one that you research, whether it's Ethereum, whether it's Bitcoin. I look at these coins now, still, I would say it's still speculative. I do see some value, right? I do see the demand, and I do think that, hey, maybe one should pivot, if possible, some or a very small bit of their portfolio to one that they properly research due to a forward-looking recommendation or perspective on the outlook of cryptocurrency. I have looked at Dogecoin, Dogecoin. Looked at Dogecoin in this TikTok society world. Elon Musk has talked about Dogecoin, and it's received a lot of hype. And if I'm looking at any, maybe that's something that if I want to take that speculative chance, I might look at that, or I might look at others, right? Again, eyes wide open, because I saw an article on Dogecoin, and they said, hey, it could break $1. Will it break $1 by the end of 2021? That would make Dogecoin's market cap over $127 billion. That's bigger. To liken that to a lot of your other larger companies, that's bigger than Wells Fargo, right? That's bigger than some of the Royal Shell Petroleum. That's bigger than some of your petroleum companies of the world. Right? That's how big that would be. Is that going to happen in a year? It's not likely. Not likely to do that anytime soon. Meaning that, like, if you just look at a comparison, that would make Dogecoin bigger than Wells Fargo, right? That would make Dogecoin bigger than some of your petroleum, oil-producing companies. I mean, it would make it astronomically large, and I just don't see that currency will be there in a year. But again, those are the numbers. Those are the facts. And now that is, even something like that example is broken down for you, you can see how the media or the hype around it saying, oh, it's gonna hit $1. It's not really realistic, at least not probably in the short term, right? So you have to understand that it's a lot of hype. It's a lot of, and that's really what it is. It's nothing that I see that's tangible that you can really tie your horse to just yet. However, maybe again you have some sort of allocation to it if you have the disposable income like an NFL player may have. So no, if we're going to speculate, if I'm going to throw my lottery ticket, that's what I'm looking at. Again, I'm not looking at this to replace any of my strong investments, large cap, whether it's large cap value or small, whether it's private equity. I'm not looking at it to replace any of that. If I invest in crypto, which I have put a small monetary amount into, it's purely for speculation and for me to make sure I have a small allocation into a digital currency that I feel is going to do well in the future. I do think blockchain technology is one that it can't be denied, right? All the big players, institutional players, are recognizing blockchain technology and cryptocurrency as a digital medium and asset that things need to be figured out with. But they do feel positive on the outlook long term, and I want to put some resources there just to make sure that I'm broadly diversified in everything I do, right? Again, I am not operating as a financial advisor in this capacity. This is for edutainment and information purposes only, but it's something that hey, again, maybe you want to tip your toe in the water and look at it, but you're looking at it from a broad-based diversification perspective. All right? Thanks again. And we're going to move right into, I also want to talk about our 2021 outlook. I have a great friend of mine, John DiMatteo of DiMatteo Financial Group. Up next in the Elephant in the Room segment, you've heard from him before. And we're going to just talk about our 2021 outlooks, things that we're looking at. Hopefully you stay on board. Here we go. Where do you think the market's going to be next year? What's your outlook? Are there any specific sectors that you think are going to do well?
Well, Mike, I'm very optimistic of the market long term. And as long as the Federal Reserve keeps interest rates at zero, I believe that will lift all ships in regards to the market continuing to perform. Does that mean we're not going to have pullbacks or corrections along the way? No. I wouldn't be surprised if we see a 5 to 10% correction here in the next 30 to 60 days. But if you have a long-term horizon, you're going to be very, very happy with the market moving forward. And try not to time the market. Continue to invest. I love the 500 index fund. I think it's a great way to start out. I believe that everybody should have a foundation in the 500 index when they're investing, no matter what their risk tolerance. Now, you might not have 100% invested in the 500 index. That's going to be based upon the individual's risk assessment, but everybody should have a piece of that 500 index. And I believe it's going to do very, very well long term.
That's great. One of the things, and just speaking about the 500 index, right? I think just Friday, major shakeup. They added Tesla to the 500 index, right? So there's a major rebalancing there. So I think you're going to see major volatility in that index. That's one thing, and that's okay, because like you said, if you have a long-term time horizon, you can't get caught up in that anyway. But I also think that now is a perfect case for investors to also look at small cap. I think that a lot of innovation is now going to be in your small cap and in your value. Large cap's going to do what it does, and it's going to continue to do so. But I really think that you have a case for your smaller players in this space, especially for the short term, with the S&P 500 being maybe a little more volatile than normal due to the rebalancing. The couple of sectors that I really am bullish on are financials. With the coronavirus package, just some of the large financial institutions able to rebalance their debt. I mean, I really think that financials, your best of the brand, your Bank of Americas, your Wells Fargos, I think that you really are going to see a major lift in financials once you see an influx of this cash come into these banking institutions. So I love financials and I love renewable energy under the Biden administration. If that continues to go through, I really think that you're going to see a lot of renewable energy plays. And if you're, again, long-term and moving to a zero net carbon footprint by 2050 is what they say, I think those are two good sectors that I'm keeping my eye on.
Well, I always like to say from small beginnings become great things. So that should fare well for your theory on small caps. I like the diversity of the large caps. The 500 index, you have 500 stocks in there. A lot of these stocks pay a dividend, and you're always going to have rebalancing in and out of the 500 index. The economy's changing. It's going to continue to change. It's a great way to be diversified. It's a great way to not have all your eggs in one basket. And it's a great way to take advantage of this low interest rate environment. And I think it's here for the long term. That should do well for stocks. That should do well for home real estate. I think individual homes are going to continue to appreciate above normal moving forward. Now, granted, you're going to have some markets like New York and California that are going to struggle. You can tell with the lockdowns and people making a move to Texas and Florida. So those markets are going to be hotter than the average market. But as a whole, I look for real estate prices in regards to home real estate prices to continue to do well moving forward, at least for the next 4 to 8 years, maybe even longer.
All right, so there we have it. That's another episode of the What We Don't Know podcast. Hope you learned a lot. We talked about the case for cryptocurrency, some things you want to keep in mind when investing in crypto and any other speculative investment for that matter. And I hope you learned a lot. Until next time, this is Mike. Peace.